Once we've established what our tax rates are, we're now going to get into the real meat of developing our budget. We have a personnel screen. In the personnel screen, we're reaching into the payroll records in QuickBooks and pulling each employee over into this budget tool. So every employee has a setup screen. We identified the employee by name. We identified their rate of pay, either as a salaried rate or an hourly rate. For a salaried employee, we're going to show the annual rate. For an hourly employee, we would simply show an hourly rate. So this will behave the same way that payroll behaves in QuickBooks, where an employee can be set up either as a salaried employee or an hourly employee. The additional fields that we have to establish are the job title of the employee, the state worked. This tells us where the employee will be taxed for state unemployment tax purposes. We also identify the employee supervisor. The reason we do this is because this feature, this budget development feature, will also provide us with an organizational chart. Finally, the number of hours in the year are going to be tracked to make sure that we distribute all hours. Now, once we have these overall parameters established, we then come down to the actual tabs for budgeting out the costs for the particular employee. I'm going to begin actually looking at the Indirect Labor tab. The Indirect Labor tab enables us to budget the hours that this employee will utilize for compensated absences and for any indirect labor charges. This being a person who works on contracts, a direct labor employee, we will have essentially the compensated absences budgeted. So we are providing 80 hours for holiday expense, 40 hours for sick leave expense, and 80 hours for vacation. So the contractor can provide in this screen whatever number of hours are provided through their leave policies. So what we've done here is we've utilized 200 hours at this point. Now, one thing you may be thinking while we are populating this screen is, will we have to set this up for every single employee because it seems redundant? We have a feature here where we can copy transactions. So what you can do with this is once you've established holiday expense at 80 hours, you can select this feature and you can come down the line and you can copy that into every employee if you so choose. Now, once we've got the indirect hours established, we now come over to the Direct Labor tab. We know that this employee will be assigned to this particular contract, and ICAT is reading the contracts out of the QuickBooks Customer Center the same way ICAT behaves in the traditional ICAT tools for establishing contracts and indirect costs. So we've selected the contract, and we can provide the number of hours that this person will work directly during the course of the year. So we expect 1,888 productive hours out of this employee. Next, we're going to come to the Group Benefits tab. In the Group Benefits tab, we can access any accounts that we've established to be group benefit type accounts. What we're going to do then is access this drop-down to identify the account, and we will then identify how much we plan to spend on that particular benefit for this employee throughout the course of the year. So what we're doing is budgeting $500 for benefits administration. We're budgeting $12,000 for group insurance. We're budgeting $3,000 for retirement plan contribution. And then we're providing another $3,000 for some additional group insurance for vision and dental and disability. Finally, we can budget bonuses for employees. Doesn't mean that you have to pay them, but you can at least include them in your budget. In effect, what we've done is we've budgeted all the costs associated with this particular employee, and we've distributed those labor costs pursuant to how we expect them to work productively as well as with compensated absences throughout the course of the year. So we can now go through our entire roster of employees and determine on the front end of the year how much we plan to pay them and how we expect them to distribute the labor costs. So we can look at each individual employee and see this person's also on that same contract and has the same compensated absence. The next employee, same compensated absences, but we have a different contract. Now we're coming down to a program manager. This program manager has not only the compensated absences, but we expect this individual will be charging to overhead labor during the course of the year and to some bid and proposal labor during the course of the year. So we are expecting 1,728 hours of productive time, the rest being indirect. We're also budgeting the group benefits, and again, we're budgeting bonus. Let's show an example of someone who charges entirely to indirect. This employee has no direct labor. The title is controller, so that's an administrative position, and we're budgeting the compensated absences, and we're budgeting the remaining hours to general and administrative labor. Again, we're budgeting the benefits for that employee, and if we're anticipating providing that employee with a bonus, we can budget that bonus as well. So the idea here is we're going to go through our entire roster of employees and budget out the costs for each particular employee. At the end, we're going to generate a report of labor and benefits by employee so that management will be able to see exactly what each employee costs. So I'm going to jump ahead here, go back to the budget start page and come over to reports, and I'll show you that report, labor and benefits by employee. For this report, you can see for each employee, we're showing the budgeted gross pay, the budgeted bonus, so the total gross pay. We're showing the payroll taxes, which we will incur on that employee, and we're showing the cost of the benefits for retaining that employee. So what we see then is the entire cost for labor and benefits for this particular employee. And we can scroll down through each one of our employees and see that same information. Now, I'm going to hop back over here on the personnel screen because I want to show something else. We are going to budget all positions, whether they're currently filled or not. And if you'll notice down here at the bottom, we're budgeting 3 new hires. And what we're doing there is we're anticipating these new hires to work on new work. And what I will demo for you as part of this feature is that we can budget employees into cost proposals, and we can toggle that information, that data, in and out of our provisional rates. So we can see what our provisional rates will be with our existing body of work, and we'll be able to see the impact on our indirect rates of adding new work. So we can, in essence, determine our provisional rates, and then as we prepare proposals and we're considering our pricing for those proposals, we can actually consider what the impact of adding new work will be and get the benefit of those lower indirect rates into our pricing. It's a very powerful option.